Hi, my name's Jeff Mullen. I'm founder and CEO of Dynamics. We started Dynamics to change the world of payments, and we have. Dynamics has raised over 110 million US dollars. The last round was a $70 million round led by MasterCard and the Canadian Imperial Bank of Commerce. The post-money valuation was over $600 million. Dynamics has developed two technologies. The first is a computerized payment card. We put buttons and displays into the card so consumers can select different accounts and different functionalities at the point of sale, and banks can experience different optimized business models because of that. The second is the only global authorization-based loyalty and engagement system on the planet. Anywhere in the world, our system will trigger engagement and loyalty off of auth so that you can get your rewards and engagement within about half a second of a transaction. Combined, both of these products currently impact millions of consumers. When you put a good hardware solution and a good processing solution together, you can create very meaningful products. And so this is a product that we recently introduced at a prior Finovate. We're going to go to the overhead projector. This is the CIBC Tim Hortons Visa card. This card has two buttons. One button to use credit and to earn points. One button to spend your points at a Tim Hortons location. This is the only network certified, globally accepted multiple account number card in the world. And what it does is it allows you to provide different interchange tiers for different types of transactions, regardless of the actual routing established at the merchant. And so when you press a different button, it will actually rewrite all track 1, track 2 data on the mag stripe. It will write different data into the EMV chip, and if the issuer would like, will actually run different network applications. And the same thing with contactless. This is actually a multi-network card. When you press the Visa button, a Visa credit card data is written to the stripe, and a Visa applet runs on EMV and contactless. And anywhere where Visa is accepted, you can make a Visa credit transaction, a high interchange credit transaction, and Tim Hortons can earn high interchange rewards for its cardholders. We use our real-time processing to instantly move those rewards to a Tim Hortons proprietary closed-loop prepaid account, both on contactless and on magstripe. And as a result, there's no interchange on those transactions. It's cheaper than cash. So now you have one of the largest banks in Canada, the largest retailer in Canada, that's supporting high interchange credit on global transactions and domestic transactions. And when it's in their store, it's treated better than cash. It's less cost than cash. So for the first time, we're going to unveil at FinovateAsia to the Asian market the performance data for this card. So how did this card perform? This is the fastest growing co-brand credit card in the history of Canada. Charlie Scharf, former CEO of Visa, on page 7 of his annual shareholder letter, it's the only co-brand card mentioned by name and highlighted by name. Merchants will typically look at short-term redemption rate to see increases in frequency that cards deliver into their stores. You may see in a short-term redemption rate 10 to 20%. The reward redemption rate in the short term for this card is so high that it's one of the largest that anyone's ever seen on cards. This card has changed market share in Canada. And so what we're going to do today is we're going to take this hardware and processing and we're going to apply it to just one example for how this could differentiate products in the Pacific Rim, and more particularly on the hardest form of payment, which is core debit in the Pacific Rim. The cards we're going to show will increase the average interchange by 50 basis points on all core debit for affluent and the mass affluent market. Before we do that, let's go back to the overhead, and then let's look at what the clear cards look like. For the Pacific Rim, we had to develop cards that lasted 5 years, so these cards carry 5-year expiration dates. Here's what the cards look like clear. These black specks are all different chips. There's over 130 components in the card. You press different buttons, changes the mag stripe, EMV, contactless, can run different applets. Just as flexible, just as durable. Network certified, the only network certified, globally accepted multiple account card in the world. We apply that multi-account technology to a multi-currency product. This card can have any buttons. The one we're showing has 3 buttons. One is euros, one is US dollars, and one is Japanese yen. For this multi-currency product, when you press a currency, we write to the Stripe, EMV, and contactless chips an account number that actually settles in that country. Now, this is a key to the economic business model for this card. Currently, traditional cards, when you leave a country and go out of country, it has to be rerouted to the country of origin to settle, and that introduces rerouting fees. This card has none of those fees. More importantly, 25% of all transaction volume, roughly in the Pacific Rim, is cross-border transaction volume where merchant terminals will actually do the FX. So the merchant terminals will sense that the card is an out-of-country card. The merchant terminals will prompt the consumer to select the current currency in the country or the currency of origin, and the FX revenue will change from the issuer to the merchant. That is typically 200 up to 800 basis points a transaction. These cards, when they're used in country, they settle in country. They're seen as in-country cards because they can deliver specific account numbers associated with that country. As a result, there is no dynamic currency conversion on these cards. The readers believe they're a domestic card, and they don't trigger. As a result, the consumer enjoys a constant experience wherever they go, and the issuer now has, on 25% of their volume, at least 200 basis points. So on average, they're making an extra 50 basis points on core debit. If you're a bank trying to compete on core debit, what would happen if I gave you an extra 50 basis points? Would you give people an extra 0.5% of rewards, a 0.5% of cash back? Would you use that to inflect your business models? So these computerized cards can completely change the routing structure by actually providing independent account numbers and independent account numbers on different network applets. We're outside. We'd love to show you these cards and other cards we've created. Thank you so much for your time today.